From our Stars and Dogs segment, it's time for this week's Dog.
I'm going to take that one. It's Prometic Life Sciences, symbol PLI on the TSX. Current price is just under $9. Market cap is around $209 million. It was down 23% yesterday alone following a disappointing earnings release and an astonishing 97% this year. What does the company do? That's important. It's a biopharmaceutical corporation with a pipeline of small molecule therapeutics under development to treat unmet needs in patients with liver, respiratory, and kidney disease, and including rare diseases. The company does have products in the market right now, is producing revenues. But what is driving this stock lower? Prometic recently did what is called a share consolidation. So existing shareholders got one share for every 1,000 they held, reducing the share count from an astonishing 23.3 billion to 23.3 million common shares. Now, after completing this massive share consolidation, management promptly converted $229 million of outstanding debt into common shares, diluting existing shareholders once again, and then proceeded to raise $114 million in gross proceeds raised in a couple concurrent financings. I guess, hey, what can I say? Good on them for finding somebody willing to fund this money pit once again. Now, the drop yesterday was powered by weak Q2 results. Total revenues for the quarter were $8.8 million compared to $20.2 million during the same period last year. The company also reported significant operating losses and incurred a net loss of $133.7 million, mainly driven by an accounting impact of the loss on extinguishment of liability caused by the debt restructuring. Now, our take on this, in our opinion, the main reason the company found it difficult to raise capital was the fact that it has allocated investment capital very poorly, to say the least, historically. In fact, Prometic has an accumulated deficit in its history of $922.9 million. That's close to $1 billion in capital that it has raised and created no current ongoing capital or cash flow with those investment dollars. Not a track record I would want to invest in. Perhaps there are some promising products here in the pipeline for Prometic, but we've heard that for decades. But the track record, reckless dilution, and lack of current cash flow make it too risky for our blood, despite the recent collapse in the share price.